Welcome to the EP Wealth Advisors Market Update. My name is Breen Murphy. I'm the Director of Client Experience here, and I'm joined by our Director of Portfolio Strategy, Adam Phillips. He's a chartered financial analyst, and he's a certified financial planner. You may have seen him in the Wall Street Journal, in Market Watch, in CNN, and various other publications as well. So we're lucky enough for him to join us today. Adam, how are you doing?
I'm doing okay, Breen. How about yourself?
Doing really well. Doing really well. It's nice to be back. All right. So Adam, talk to me a little bit about what are you hearing from clients? What are they saying? What are their concerns?
For the last several weeks, I think since we last did one of these market updates, clients have been pretty pleased. I mean, the market's been cooperating. It's been behaving itself up until last week. Last week the market, just the S&P 500 declined nearly 5%. So it was the biggest weekly decline that we've seen since March.
Hmm.
And so, that was driven by some of the comments made by Federal Reserve officials, as well as some signs that we're starting to see um, potential buildup in cases. It could be a potential second
Hmm.
wave, or what some are calling just a continuation of the first wave of the coronavirus. But either way, we certainly saw fear come back to the markets. So far, we haven't heard too much from clients. I think most people are taking the view that we had gone so far, we had recovered so much in such a short period of time that it's fair to argue that we were probably a little bit overextended and due for a little bit of a pullback. So I think the question now becomes, do we have more of a pullback to go? It was that 5% decline last week. Was that it?
Hmm.
And markets kind of got it out of their system, or do we have further to fall now? I think naturally when we see signs that the market is moving towards more of a risk-off mode, we naturally wonder how much worse can it get, and I think clients are asking, are we going to revisit those lows that we saw in March? Right now, that's not certainly not our expectation. We think that volatility could be with us certainly
So,
over the foreseeable future, though. Mhm.
so as you're saying, volatility is going to be foreseeable over the future, but you may not be expecting to retest the lows. Behind closed doors with the investment committee, what are the things that you're really looking at to help you evaluate that and understand that? And for me personally, when you guys have talked a lot about that, can help explain to me and to other people how the market's done so well with so many really fundamental markers not showing as well as they normally would.
I think that the second part of your question, that's really what everyone's wondering, and candidly, ourselves included. I mean, all investors are really trying to make sense of this apparent disconnect between investor sentiment and really the economic realities that we're facing today. And so, as it stands right now, after last week's give back of call it 5% or so, we're still up about 35% since the March lows. Okay,
Mhm.
so we're still doing quite well, and my really the best explanation or the biggest driver of that rebound has been policy support, both at the Federal Reserve level in monetary stimulus,
Policy.
as well as fiscal stimulus, fiscal support, really,
Mhm.
to really just get us to that other side, to prevent this health crisis from becoming a financial crisis. And it's really gone a long ways towards that the Federal Reserve especially has been extremely accommodative. They made comments last week implying that they're likely to remain so for quite some time. And
Mhm.
so that's really provided the support and that catalyst for the market going higher. I think what's also helped is really going back to that argument that stocks are forward-looking indicators, and what we've seen is that every state is in some phase of reopening. And so as we start to reopen, we're going to see the economy return to some level of normalcy. It's going to take some time. It's not going to happen overnight. And I think that really gets to your first question of what we're talking about behind closed doors. It's really trying to gauge the scale and the scope of this economic recovery now. A lot of the economic indicators that we would normally watch, a lot of them aren't as useful as they normally would be because we need more timely data, what we refer to as high frequency data, high frequency indicators. To give you an example, One that we watch closely is TSA traffic across airports around the country. That's telling you how many passengers are going through TSA checkpoints on a daily basis around the country. And so this number has rebounded quite a bit over the last month as people are getting a little bit more comfortable with traveling, but it's still down close to 80% over the prior year. Okay. Another one is restaurant traffic, really tracked by Open Tables network of restaurants. They actually track this. They provide the numbers daily. So again, a really high frequency indicator. And they provide it across the world, but really just focusing on the U.S. Again, you're seeing that rebound over the last month or so, but you're still down about 70% over the prior year. And so we're showing some signs of returning to economic activity, which is great. But I think part of us, we're kind of struggling with the fact that the market appears to be pricing in a what they call that V-shaped recovery.
Mhm.
And so I think that remains to be seen. We're not quite there yet. I think for right now, we're coming off such low levels, and those indicators are good examples of that. We're coming off low levels that, for the time being, all charts that we look at are going to look like they're forming a V. But it's going to take some time before we can actually determine whether this is a sustainable rebound. We things that can knock it off its course certainly is another wave that causes people to either be forced to shut down again and shelter in place, or the fact that there's going to be some hesitance among households to go back outside. And even though a lot of them there's a bit of fatigue with sheltering in place, and a lot of people are anxious to get back out there again, I think there's a whole another set of households that are quite worried, and they could be the demographic that's a little bit more at risk, and so they're not likely to go back to their normal ways of consumption
Mhm.
just yet. So I think that's what remains to be seen.
Okay. So as I hear it, we're seeing like a disconnect, but because there's this really accommodative monetary and fiscal policy, combined with people starting to reopen a little bit, even though it's still down, that's been one of the things that's helped us, start to see a jump start back in stock prices. And then, as you were saying, though, we may not want to expect that to continue just because the economic data isn't supporting, that rapid change. So as you're seeing this environment, one of the things that we've heard is like, COVID is one of the great accelerators. So can you talk about like some of the themes behind the changes in the EP Wealth Advisors portfolio? Like what is the direction we're going, and why are we going in these directions?
Hmm. Yeah, sure. So, well, I think it's important to start from just the broad asset allocation level. So, we've talked about it before. We had been overweight in equities, meaning we had a higher allocation to stocks than we normally would
Hmm.
across all of our strategies up until late last year. We scaled that back, late last year to what we call neutral allocation,
Hmm.
meaning in a strategy that generally targets a 50% equity allocation, we're pretty close to that number today, and we haven't changed that. We still think that equities a year from now are going to be in good shape, but I think the next few months it's kind of a question mark, especially considering the rebound that we've seen over the past several weeks. And so we're a little bit more cautious just here over the near term. We want to wait for some more information to come. And so we're still neutral, but that doesn't mean that we can't make some changes within the allocation itself. And so some of those changes have been at the sector level. We've been adding to, not to get into individual stocks specifically, but we've been adding to technology names, to healthcare names, areas that we think have the support right now and have the ability to outperform during this environment and have that staying power. One of the things that we've talked about, Breen, is the fact that what a crisis like this does is it serves as a catalyst for some of those trends that were already underway. And I
Hmm.
use the example of online shopping through companies like Amazon,
Hmm.
right? And what sheltering in place has forced a lot of households to do is to adopt, is to try these new technologies because they really didn't have an option. And I think
Right.
a lot of them have found that it's quite convenient. and maybe maybe some consumers are happy they can now go back to shopping at local malls, retail stores, at their grocery stores. But I think a number of them are not going to go back, and they're going to remain focused and really found that appeal in the convenience of online shopping platforms. And so that's an area that we're focusing on is what has this done to kind of catalyze that trend, and what will be the themes going forward. And those are the types of things that we're focused on.
Okay. So for the person that's working with an EP wealth advisor and, they've heard all this, but maybe they want to have like a better conversation with their EP wealth advisor, what are some questions they should be asking them about, about their investments and about their, their financial plan?
My answer to this is generally the same, but I think now it's incredibly important, number one, to revisit your financial plan with your advisor and really determine whether you are in the appropriate asset allocation for your given circumstances. We now have the benefit of being able to look at those financial plans again from a relative position of strength. It's very different to look at a financial plan today and one's asset allocation today when the stock market has recovered most of the ground it's lost throughout the year. I think through today we're still down about 6% on the S&P 500, but at its worst during this drawdown we were down about 34%. And so now we've made up some of that ground that we've lost. Time to take a look, and just in case there is another drawdown in the stock market, make sure you're positioned accordingly. I think that is the most important thing.
Right.
One of the things that's also so important is to focus on for those clients and individuals who are still employed, if they have 401k plans that they manage themselves and through their employer. I think it's important to bring those into the conversation. Make sure that there's a cohesive strategy there, so that there's some consistency in building out that strategy to achieve one's long-term goals. I think that's very important.
Okay. Adam, thank you so much for your time. We really appreciate your perspective on the markets. I always like to ask something a little bit personal. We took a month off, as I had my second child. So, you're farther along than me. How do you go about having like a good sleep routine? Anything you got going there, to help get the rest that we all need to get through these uncertain times?
Sleep when the baby sleeps, and try to sleep whenever you can. I mean, it's a battle for sure. We got very lucky with ours, so I'm probably not the best one to ask there, but we got extremely lucky with ours, and but I would just say sleep when you can, because you don't know when those sleepless nights are coming.
Yeah, well, they're every night right now, so I'm just happy it looks like my eyes are open. But for all our listeners, thank you so much for tuning in. We really appreciate it. If you have any more questions, please feel free to reach out to your EP Wealth Advisor, or you can subscribe to our blog. Send us a note through the website. And, we're always listening to this. Thank you so much. Have a great day.